This strategy is so simple and it happens every single day at 10 a.m. And all you need to know to be able to execute is a couple simple steps. And we're out of there. Just got taken out for the 1 to 2 risk reward. In this video, you're going to learn how we execute on our correction-based strategy. I'm going to actually show the back-tested results of trades that I took this week and also how our members were able to capitalize on it with our live VIP sessions that we have every single day. Okay, so the first thing that you're going to want to know is that we're going to be waiting for 10 a.m. Eastern Standard Time. And why this is so important is because that's when the 4-hour candle closes. So while we're waiting for the 4-hour candle, because this is going to give us a ton of valuable information. Depending on how the 4-hour candle closed, we could either see a potential 4-hour candle continuation or a possible reversal. And we want to wait for this 4-hour candle because we want to make sure that we get in within either, if we see a reversal within the top wick, if we see price move to the downside here, and this becomes now from being bullish to now being in a bearish market structure, then we want to make sure that we're in on the top wick for that continuation down on the reversal. And how we're going to pair this up with is the lower time frame. So we want to dial down to our smaller time frame within this candle, and on our smaller time frame, price will look something like this, of where we're creating higher highs and higher lows, closing as a bullish candle. So essentially, if this was our candle close, price pushed up, created this top wick, pull back down and close. Our close would be right here. Price pushed down. This is a bullish candle. We opened up, closed right here at this spot. This is the high of the candle. Now, whether we see a bullish push up, a break of that high, and a possible flip once we get a break of our key low. And how I explain our key low is if price is creating higher highs and higher lows, and we just broke for this high up here, this now becomes my key low. If this area gets broken, that's a sign of a lower time frame market shift and a sign that price could now flip and push to the downside. And we'll look to scale in on a correction based trade if price has been creating higher highs and higher lows and the overall market structure has been bullish. So like if price has been coming from this lower area here and we just seen this bullish push up, we have a huge bullish candle, a correction. It's likely that we continue pushing bullish. And I'm going to show you with the 3 examples that we took this week. All 3 trades that we took happened just like this in terms of our market structure, where we have a 4-hour candle close, a larger time frame push up, and then a lower time frame reversal, where we get a corrective based trade, and then price begins to trade in an upward direction following. And this is just one of the 2 models that we go over in our VIP, our correction based model trade. So how does this look like on the charts, and how do you actually apply it to start making money in the markets? I'm going to show you and break down the 3 trades that we took this week that executed perfectly on this same exact system. Okay, so the first day we're going to look at is Monday here. We're going to take a look, see price close as a bullish 4-hour candle. So after we have our 4-hour bullish candle close, I want to dial down to the 15-minute time frame. On our 15-minute time frame here, we had just taken out this key high. So as the 4-hour candle closed, we had just taken out this key high here. Price then took out that high, and after, on the smaller time frame, we seen a smaller time frame change of character. So when we dial down to our 1-minute time frame, this is how we execute on our correction based trade. Price just swept that larger time frame high, and then we want to see this lower time frame shift, right? Price created a high, created a low, created a new high, and then we broke through this low. When price corrected back up, this is when we scaled in on our entry again, aligning with this 5-minute candle bearish close, right? So we had the 5-minute candle aligning with this structure here after taking out this high, anticipating a possible reversal following that high, waiting for the 4-hour candle to close, right? And the perks of having the 4-hour candle close, excuse me, this is my trade here. And all we look to do for our corrective based trades is just look for a solid 1 to 2 risk to reward. Why? Because price can continue in the direction of the trend, and we don't want to make sure that we're going against the trend. Obviously, at any point in time, price can shift and continue pushing bullish, and this is something like I said, we go over in our VIP, and we actually had members capitalize on the continuation based trade for the 1 to 2 risk to reward. Another perk for waiting for 10 a.m. is most of our news events, except for FOMC, will have already taken place by this time, so you don't have to worry about any liquidity spikes of price pushing with super high volume in your direction, we always want to wait for our news events to come out and then look to scale in. And in particular, this will help you be out of the markets when high volume news is coming in, and then you can execute following the high volume news in the direction of the news, or if price reverses, you'll be able to capitalize on it then. So if we take a look here at Tuesday, this is Tuesday here. This was our 4 hour candle that closed in our New York session. What we seen happen at the top of this candle here is a sign of a rejection. Not only that, but we had a 4 hour high get swept here, which was a sign that price could potentially flip on the smaller time frame. But we have to wait for that smaller time frame shift. So when we dial down to our 15-minute time frame, we can see that our 15-minute high was swept here, and that it was probable that price could start to flip and cause a reversal. And it was probable that price could form a reversal. So we're taking a look, dialing it down to our 1 minute time frame, because that's where we want to actually see our shift. So when we dial down to our 1 minute time frame here, you can see that price was creating higher highs and higher lows. Then we in fact had this low get created on the open. Price did in fact close as a bullish candle, but then we had this impulsive move to the downside that broke through these key lows here that had created our previous key high. This is a sign of our lower time frame market structure shift. Now, what did we see happen? Price then formed a correction up, and then what did we see happen? If you take a look here on the 5 minute time frame, our 5 minute time frame in fact closed as a bearish candle. You can see it closed as a bearish candle here. What do we want to do? We want to scale in on the first 1 minute candle that closes bearish following our bearish 5 minute candle close. That's how we get in on all of our trades, whether if it's a correction based trade or a continuation based trade. We always want to wait for that 5 minute candle to close in our direction and then scale in on that first 1 minute candle. The first 1 minute candle to close bearish following that 5 minute candle close was this candle here. So you can see we want to take our entry after that candle close. We set our stops above the resistance, which we are anticipating to be that candle high, and we just look to target our 1 to 2 risk to reward. It was a very, very simple trade that we had taken for Tuesday. So Wednesday of this week, I actually did not trade because we had CPI news. You can see we had this spike for CPI, and then we really didn't have anything following that market after that. So for Thursday is actually when I look to take my next trade. If you take a look here on Thursday, we're going to go to that same candle that closed our 4 hour candle. You can see we closed extremely bullish following an extreme rejection off of the lower time frame, signaling that price is in a larger time frame bullish market structure. But if you take a look here on our smaller time frame, price was creating higher highs and higher lows. Now that 4 hour candle did in fact close as a bullish candle, and it is likely that we see a bullish flip, but after taking out a high, it's likely that we see a lower time frame shift. So price closed as a bullish candle right here. This was our candle close, and what I was looking for was a smaller time frame shift, because at the time we were in a corrective structure during our market session. You can see later in the day we did have a bullish push up when the news of Israel bombing Iran came out. Price immediately pushed up on Friday, but we're going to get to Friday's move here next. So what I was looking for on this smaller time frame, if we dial down to our 1 minute time frame here, price had just taken out this key high. That was a great sign. All right, price created a high up here. Then on the lower time frame, we took out this low. Price corrected back up. Then we took yet another low. Then we seen another correction and then a continuation down. If you take a look here on our 5 minute time frame, you can see that after price took this high, it was likely that we would start to form a corrective structure. When price created that low, created a high, and we retested within this area, I actually scaled in on this correction based trade based on the 5 minute candle, the first 1 minute that closed after this 5 minute candle here, literally just looking for my 1 to 2 risk to reward trade. And you can also see that this candle aligned with our 15-minute, and that candle there and that 5 minute candle there also aligned with our 15-minute bearish candle close. So it was likely that we could see this wick of this 15-minute candle get filled down. We always want to get in at the top wick of either our start of our new 4 hour candle, the 15-minute, or the 5 minute candle. That's where we're going to be looking to get in our entry, and we get in on our signal candle, which is going to be our 1 minute bearish or bullish candle, depending on which direction we're looking to trade. So we wound up taking this sell move here on the live with our members looking for our 1 to 2 risk to reward. A 1 to 2 was in fact hit on Thursday, and you can see on Friday we executed on the same exact thing. 4 times out of this week, the same thing happening, and we're just executing on it the same exact way. So for Friday, you can see we closed on the 4 hour time frame as a bullish candle. You can see price took out a high here. If we dial it down, 2 hour 15-minute time frame, you can see that price did in fact take out this 3,466 high, which was mentioned in our free pre-market prep, that I was looking for these highs to be targeted to come into the session with our VIP, and we were going to look to possibly trade this sell move to the downside if we did in fact see price break through this high and our smaller time frame shift. All of this was broken down for free in our pre-market prep. And so if you want to see our pre-market prep and be a part if you want to see our pre-market prep and be a part of it, you can join in the link down below. You can So if you want to join our free pre-market preps, you can join in the link down below. You can click our free Telegram. You'll be notified for every time we go live for our pre-market prep. And if you would like to join the VIP, where we actually trade live, we go through our trades, you guys are able to join us for these sessions. That is also down below in the link down below as well. So what did we see for Friday in the trade that I was looking for? Price had taken out that 15-minute high. We had just closed as a bullish 15 or a 4 hour candle. You can see price began to push down here. So after we took out that 15-minute high, I dialed down to my 1 minute time frame to see our lower time frame market structure shift. And what did we see happen? Price was creating higher highs and higher lows within this system here. And then we broke through this low. And I even mentioned on the live stream with our VIP members that we're going to look to take our correction based trade, and specifically how we were going to do it. Price created a high, it broke through that low, created another high, broke through the low again, confirming that price was in a bearish market structure. When we retested this area again, we had our 15-minute candle that closed bearish. So we had our 5 minute candle that closed bearish here. And if we dial down to the 1 minute time frame in this area, you can see the first 1 minute candle that closed bearish after the close of this 5 minute candle was right here. This is where I went ahead and took my sell entry right at this level, and I set my stops above resistance. Look to target a 1 to 2 risk to reward at this area here. And we even had members be able to catch this on the live with us. So like I said, if you guys want to join, you guys want to see more of this, you can click the link down in the description. And I hope you guys were able to get some type of value out of this and understand how we use our larger time frame and our lower time frame analysis to capitalize on these trades. We want to look at our larger time frame and then dial down to our lower time frame to see what our market structure is and for our entry and our stop loss. And then we look to target a 1 to 2 risk to reward. It really is that simple. And that's really all there is to it. So I catch you guys in the next video.